So this first question or this first set of information is pertaining to scenario one, wherein there are individuals or there will be specific individuals with no existing business who will start a partnership. Okay? So Alpha and Beta, both individuals decided to form a partnership. Alpha will invest cash equal to 60% of the total partnership capital after Beta invests his small commercial property with book value of 1,600,000. Based on recent market valuations, the property is now worth 2,600,000. The partners agreed to follow this valuation. Attached to the property is a 400,000 mortgage which the partnership will assume. So this is quite easy. Ang gagawin lang natin dito is number one, prepare the journal entries for the investment of Beta. Okay? And considering that the 60% ownership in the partnership will be owned by Alpha, it is assumed that the net investment of Beta will be the basis of the 40%. Okay? So let's give the answer. So first, prepare muna natin yung journal entries ni Beta. Okay? So for Beta, you're simply going to debit the commercial property amounting to 2,600,000 because that's already the fair value given. That's also the agreed amount. We are going to credit the mortgage payable which is assumed by the partnership, and we're going to get the net amount which will be the basis of the capital of Beta. So that's 2,200,000. That's basically itong amount na to minus yung 400,000. Okay? Now, how did we get yung investment ni Alpha? So first things first, we are going to determine how much is the total partnership capital, basing it on Beta's capital investment. So ito yung solution natin sa baba. To get the total partnership capital, kunin muna natin yung sure tayo. Sure tayo na 2,200,000 yung capital ni Beta, which represents 40% ownership. So i-divide mo lang yon, makukuha mo yung total partnership capital na 5,500,000. Okay? Para makuha mo yung contribution ni Alpha, you simply get the total partnership capital multiplied by 60%, that's 3,300,000. So yun na yung item natin. So yan yung um, capital ni Beta and Alpha respectively. Next thing that you're going to do after that is you are going to prepare yung ating balance sheet basically, or yung basic na balance sheet natin para makuha natin kung balance. So ito yung cash at saka yung commercial property. This will be the total assets. Dapat balance siya doon sa total liabilities and equity. So that's going to be mortgage payable, alpha capital, and beta capital. Okay? So no problem tayo dyan. So hopefully you all got this problem. Okay? Let's proceed with the next scenario. So scenario number 2 pertains to Flores and Gloria. Okay? Flores being a sole proprietor with an existing business, and Gloria being the individual who wants to join the partnership. So given these are the information for Flores, and these are the adjustments. Okay? And then afterwards, Gloria will be investing. Okay? So what are the data or are the items found in the books of Flores? We have cash, accounts receivable, inventory, furniture, and that's with the giving you a total assets of 415,000. While the liabilities and equity contains the accounts payable of 45,000, notes payable, and Flores capital of 310, giving you a total of 415,000 also. So that's already equal. Okay? So what are the expected adjustments? Accounts receivable will be valued at 110. So we are going to establish a 10,000 allowance. Inventory has fair value of 90,000. So we're going to add another 5,000 to the inventory. And the furniture has fair value of 120. So we are going to reduce the balance of the furniture by 10,000. Okay? By the way, when you say furniture at net, it means that this is already net of the accumulated depreciation. Okay, so after which we are going to determine the 40% investment capital of or investment of Gloria. So let's move on. So this will be the adjusting entries in the books of Flores. First, we are going to establish an allowance of 10,000 which will result to a debit to the capital. Next, we are going to increase the value of the inventory by 5,000, giving a credit to Flores Capital. And last, we have furniture. That will be reduced by 10,000, giving us a debit to Flores Capital. So basically, adjustment to the capital. If we go back here and we are going to determine how much is the ending capital or the adjusted capital of Flores, we will start with 310,000. And we know that there is a debit of 10,000. There is a credit of 5,000 and another credit of 10,000. Sorry, that's debit 10,000. So that's 295. So the expected capital of Flores upon closing entries is only 295. So let's check. So this will be the closing entries. We are going to debit all items. There will be no change for cash and receivable. Inventory has increased and furniture has decreased. Your allowance has a 10,000 balance. Accounts payable and notes payable the same. And capital will be 295, similar to or the same with the amount that we computed here, 295. Okay? Then finally, we're going to invest. Okay? So we will invest the items that were closed in the books of Flores. The net capital is still the same. That's going to be 295,000. Okay. Now, the question is, how much will Gloria invest? So similarly, or similar to how we computed a while ago, if Gloria will invest 40%, then 295,000 is equivalent to 60%. So you will divide this by 0.6. And you will get 491,666.67, or basically, if we will round this off, this is just 491,667. Okay? And then we will get the investment of Gloria, so we will deduct from here the 295, or you simply multiply this by 0.6 or zero point 0.4, sorry. So that's going to be 196,667. This will be the amount. Okay? And then that will be the basis of the journal entry. So a debit to cash and a credit to Gloria Capital. From there, we are going to present the basic balance sheet or the statement of financial position immediately after the partnership formation to determine if our balances are correct. Oops, sorry. So I think I failed to place it here. So let's prepare that in another Excel file for a while. So let's have it here. Okay, so what are the expected items? So we have cash there and another cash there. So we'll have cash here. Okay. And then we will have your accounts receivable. You have your allowance for bad debts. You have your inventory. You have your furniture. So that will be your total assets already. So the amount of cash that will be here is equal to 80,000 plus the 196,667 here. So it's going to be 80,000 plus 196,667. That's going to be the cash balance there. Okay. Your accounts receivable will be at 120. Your allowance for bad debts will be negative 5,000. Is that correct? Sorry, 10,000. Okay. Your inventory will be measured at 90,000. Furniture at 120. Your total assets will be equal to okay. Next, we go to the liabilities. We will start with accounts payable and notes payable. Then notes payable. Then we will have Flores Capital and Gloria Capital. Okay, so accounts payable will be the same. That's 45 and then 60,000. 60,000 for the notes payable. Flores Capital will be 295. Then this is going to be 196,667. Oops, sorry. Get the total here. So your total should be the same for the assets and the liabilities and equity. So this will be our final item there. All right. So this will be the basic financial report or statement of financial position for Flores and Gloria. Okay? So the main thing here is we need to know how much or if the balances are equal, okay? And to determine whether your assets and liabilities follow the basic accounting equation, which is equal to asset is equal to liabilities plus equity. So that's basically your answer for the second one. We go to scenario number 3, wherein there are um, sole proprietors, two or more sole proprietors who will establish a partnership. So for this particular problem, we have Andres, Bayani, and Kapitan. They are sole proprietors and they will be establishing a partnership um, with three of them being the partners. So the balances are already provided here. What we are going to do is we are going to make the necessary adjustments as provided here. And then we are going to do the same process, adjustments, closing entries, and investment to the partnership books. And then we're going to prepare the basic statement of financial position. Okay, so Andres, Bayani, and Kapitan has assets which have balances as provided in the column. So we have cash, receivable, inventory, land for Andres, equipment for Bayani, and then furniture for Kapitan. And then we have accounts payable and notes payable, giving us Andres capital with 220,000, Bayani capital with 190,000, and Kapitan capital with 190,000 also. Expected adjustments will be a 5% allowance for bad debts. Okay. Inventories will have a fair value of 75, 60, and 80. So we are going to adjust the balances here. Recognize unpaid salaries amounting to 14,500. So meaning we are going to recognize additional liability here later on. That is going to be accrued salaries. And then land will increase by 20,000. Equipment will be decreased by 11,500. And your furniture for Kapitan will decrease by 8,500. So let us go start first with Andres. So what are we going to do? First, we are going to adjust the books of Andres. So what we are going to do is to establish the 5% allowance for bad debts, which will be debited to Andres capital. Next is we are going to increase the inventory by 10,000, which will be credited to Andres capital. Finally, we have an increase in the land for 20,000, giving a credit to Andres capital. After the adjusting entries, we are going to prepare the closing entries already. So what will happen? The balances of cash receivable will not change. The inventory and the land of Andres will be modified based on the adjusting entries provided here. So the inventory will increase as well as the land. We're also going to debit the allowance for bad debts because this is the closing entries. Accounts payable and notes payable will not change, giving us Andres capital of 246,000. You can also do the direct computation of the capital by simply getting the original capital balance in the problem given and then make the necessary adjustments as provided in our adjusting entries here. Okay? So to get the shortcut, let's start with 220,000 and we are going to make the adjustments here. So we have ito na lang. So we have 220,000. The first entry will require a deduction, so minus 4,000. This will have an addition. Both are addition, so I'll just have plus 30,000. So the cap, oops, sorry. Again, 220,000 minus 4,000 plus 30,000. That's 246,000. That's why the capital here is already 246,000. Okay? Next, you're going to make the investment. So the investing or the journal entry for the investment will simply be a debit to cash, receivable, inventory, and land, and then credit the items that were debited in the closing entries. Okay, giving us the same capital here of 246. We go to Bayani. So the adjustments for Bayani will be the 5% allowance for bad debts, which will be debited to capital, the decrease in inventory of 20,000, and the decrease in the value of the equipment by 11,500. After that, your capital for Bayani will be 154,000. It started with 190, correct? So let us have our calculator here. So we have a 190,000 balance initially. Because all of these are debit items, so it will be deductions. So minus 4,500, minus 20,000, and minus 11,500. So that's 154,000. So when you go to this closing entry, the capital that will be debited is 154 because it has a credit balance prior to closing entries. Okay, so the investment will be the same. The only difference is the items that were debited in the closing entries will be credited, and the items that were credited in the closing entries are now debited here. Okay, so those are the items. Okay, and then finally, for Kapitan, we have 4 adjustments that will be for the 5% allowance, inventory increase, recognition of salaries. Okay? That's why we have salaries here and it will be debited to capital. And then a credit to furniture for the decrease in the value of the furniture. So similarly, we have a 190,000 balance initially for Kapitan. So we have 190. Wait, where can I put this? Here na lang. 190,000. There are debits here. So the debits will be deduction and then only one credit of 20,000. So we'll basically follow the process. So for the allowance, that's going to be a deduction of 6,000. For the inventory, that's an addition of 20,000. For the salaries payable, that's going to be deduction of 14,500 and deduction again of 8,500 for the furniture decrease. We are expecting 181,000 adjusted capital. So that's exactly the capital there. All right. So with that, we can now prepare the adjustment or the investments. This will be the journal entry for the investment of capital. So we have cash, receivable, inventory, and furniture, allowance for bad debts, accounts payable, notes payable, plus the salaries payable here, giving us the capital of 181,000. So the only thing left to do is the simple balance sheet. I forgot to format this, but this is basically the balances here. So your cash will be 135,000, accounts receivable will be 290,000, allowance for bad debts will be 14,500. This is the total of the 3 allowances. Or simply, you can get 290 multiplied by 5%. This is the 5% equivalent. Inventory, land, equipment, furniture, giving us a total asset of 820,500. Your liability and equity will be consisting of accounts payable, notes payable, salaries payable, giving us capital balances of A Capital, Andres, Bayani, and Kapitan. Okay, all taken from the journal entries on the investment, giving us the same amount of 820,500 for the total liabilities and equity. So the items are balanced, so we are now all good. Okay, considering that we did everything correctly. So those are the process, or that will be the process in the investments under scenario 3, wherein there are sole proprietors who would like to establish a partnership. Okay, so that's basically the answers to our examples there. So with that, we are now going to proceed with the bonus method. The bonus method here Alright? So the bonus method is simply a process of balancing the capital contributions or the capital balances of your partners based on a definitive or based on an agreed upon ratio or an agreed upon percentage. Usually, this is aligned with the profit and loss sharing ratio of the partners. So basically, why do we need to do bonus method? Okay? So the main reason is because after the contributions of the partners, it is generally possible that your partners will be investing either more or less than the amount that they are supposed to have if we are going to base it on the ratio of the profit and loss. So in order to balance the capital contribution and the profit and loss ratio of the partners, we are going to realign or um we are going to adjust the balances of the partners. And one of the best ways to do this is, of course, the bonus method. Right. So we are going to use the balances of Andres Bayani and Kapitan, the previous activity that we did. Okay? And we are going to use that to illustrate the bonus method. Okay? So let us have the following examples. So assuming the bonus method is used, prepare the adjustment to capital in the partnership books if the desired capital ratio of Andres Bayani and Kapitan will be as follows. Okay? So we will have 5 illustrations, and what we are going to do is we are going to simply reallocate, okay, or redistribute the capital, okay, based on the desired ratios. Okay? So yun yung gagawin natin dito. Alright, so let us have the first example. So just remember, ito yung capital balances natin. 246, 154, and 181. Okay, this is just the basic method, no? Basic method muna to ng dun sa process natin ng bonus. Meron pang complicated or yung more complicated portion dyan, pero okay lang, kaya natin yan. Okay, so let's start first with letter A. Okay, so for letter A, bonus method wherein we desire equal capital ratio. So we are simply going to have columns of the actual and then the agreed and then we are going to have the adjustment. Okay, so that's basically what we are going to do. Okay, so Andres, Bayani, and Kapitan will have these balances, no? So 246, 154, and 181. Total is 581. Okay? So what will be the agreement? Okay, ang agreement daw is equal, di ba? So what are you going to do? You simply kunin mo lang yung total na 581,000, divide mo siya ng 3. Ay lalabas yung 193,667. Okay? So of course, ang issue natin dito, malamang, pag ginawa mong 667 lahat yan, so sobra ng piso. Okay? So ang gagawin mo, mamili ka na lang kung sino sa kanila ang mag-a-adjust na or sino sa kanila yung mababawasan lang ng piso. Parang ganyan yung labas. So anyway, ano naman yun? Minimal lang naman yun. So assume na lang natin si Kapitan to. Okay, so yun siya. So what is going to happen there next? The next thing that you're going to do there is you are going to determine what will be the adjustment. Okay? So close ko to. So if the balance of Andres is ito, yung actual, prior to the adjustment, ito lang daw dapat yung agreed. So i-minus mo, ang adjustment natin is babawasan natin si Andres ng amount na to. Yung kay Bayani, 154, tapos 193,667 daw yung agreed. So dadagdagan natin siya ng 39,667. Kay Kapitan naman, ito yung actual, ito yung agreed. So dagdagan naman natin siya ng 12,666. So generally, what's going to happen there? Kung babawasan natin si Andres, then Andres will be debited. Okay, the capital will be debited by yung amount ng na-compute natin, 52,333. Tapos si Bayani at saka si Kapitan, dagdag, 'di ba? Plus yung nakalagay doon kasi wala namang minus na nakalagay. So malamang plus 'yon. So paano mo ba dadagdagan yung capital? Ike-credit mo. So credit mo si Bayani and Kapitan by the amount provided there. So after mong gawin yung adjusting entry na to, masasatisfy na natin yung agreed capital. Yun. Okay? So ganun yung process natin. Okay. So to give you a chance to do it also by yourself, bago natin ipakita yung sagot, gawin nyo muna si letter B. Okay? Bibigyan ko kayo ng 5 minutes to solve it. So ang gagawin mo, same process yung parang nandito. May column ka ng actual, agreed at saka adjustment. Tapos may journal entry ka for the application of the bonus method. Saan ulit manggagaling to? Doon sa adjustment na na-compute mo. So let's see kung ano yung sagot natin sa letter B. So kay letter B, this will be how it's going to be computed. So you plot again the actual and then we will compute the agreed. So if this is 581, 50% daw kay Andres. So kunin mo yung kalahati nito, 290,500 yon. Tapos kay Bayani at saka Kapitan, tag 25% sila. So 145 to 50. So what is going to be the adjustment? Si Andres, dagdagan daw natin ng 44,500. Tapos si Bayani at saka Kapitan, bawasan natin ng 8,750 and 37,750. Okay? Respectively. So what will be the journal entries? So since yung babawasan dito, si Bayani at saka Kapitan, sila yung i-debit. Tapos si Andres, i-credit mo. Kasi increase. Okay? So yun. So same process tayo dun ha. So ganun lang yung entry natin dyan sa letter B. Okay, let's go to letter C. Okay, so letter C now we have 30, 30, and 40 for Andres, Bayani, and Kapitan. Okay, so let's see. Muna tayo sa letter C. Okay, so we go to letter C, bonus method tayo, wherein there is the desired ratio is 30, 30, 40. So what we're going to do is the same pa rin, actual plot natin, agreed will be computed based on the ratio provided. So the total capital, you multiply it by 30%, you will get this amount. Both for Andres and Bayani kasi parehas naman silang 30%. Tapos 40% kay Kapitan. So that's going to be 232,400. So what will be the adjustment? Babawasan natin si Andres ng 71,700. Dagdagan natin si Bayani at saka si Kapitan ng 2,300 at 51,400. So what will be the adjustment? Ang negative ay si Andres. So ito yung i-debit natin. Tapos positive yung adjustment ni Bayani and Kapitan. So they will be credited naman here. Okay? So ganun yung ating bonus method doon. Okay? Diretso na tayo sa letter D. Okay. So letter D will have the same process. We have the actual and agreed capital. The only difference is the ratio now is 25, 45, 30. Okay? So 25, 45, 30. So what will be the result there? The agreed capital will now be 145,250 for Andres, 261,450 for Bayani, and 174,300 for Kapitan. That's simply 25, 45, and 30% of the total capital. Okay, so the adjustment, Andres will be reduced by 100,750. Bayani will be increased by 107,450 and Kapitan will be decreased by 67. Okay, so yun yung answer natin dito. Okay, so ang minus doon ay si Andres at saka si Kapitan, so sila yung naka-debit with the respective amount provided doon sa taas. And then Bayani will increase by 107,450. That's letter D. Let's go to letter E. So letter E will be with a desired ratio of 40:40:20. So with the same process that we did, yung ating capital dito, multiply lang natin ng 40% and 20%. So that's 232,400 para sa ating 40% for Andres and Bayani. and then capital will get 20%, so that's 116,200. Adjustment will be as follows. Deduct 13,600 kay Andres, increase Bayani by 78,400, and decrease Kapitan's capital by 64,800. So ito yung adjustments natin. Ito naman yung ating adjusting entry. I-debit natin si Andres at saka si Kapitan kasi yun yung nakalagay dito. Tapos credit mo si Bayani, 78,400. Yun. So that's basically what's going to, or that's basically how we apply for the bonus method.